Well, let's get across the market open now. Jimmy Jane joining us from GBA Capital. Jimmy, welcome back. So, more records on Wall Street. This, of course, ahead of some key earnings results from the mega cap tech stocks this week. What are you looking forward to?
Morning, Andrew. So another record highs for the S&P 500 and Nasdaq. So we're seeing a bit of a huge confidence coming from the market in the tech space largely, but most importantly, market confidence I think is slowly coming back for the US market. But we looked at the futures this morning, Andrew, in the ASX, but we're looking at a bit of down about 70 bips is what we kind of potentially be overseeing with the open today. But obviously the bigger picture is still constructive. So equities are kind of still holding that near highs despite obviously a lot of the noises that's coming out from the geopolitical perspective and also rising oil prices. But we've got a lot of kind of big hitters like Alphabet, Microsoft, Amazon, and Meta and Apple, showing the reports this week. I think the market, Andrew, is probably wants to exceeded expectations right at this stage. We've seen fresh record highs. Like let's say, for example, Nvidia up around close to 4%, hitting another record high. So rarely more than about 30% from its March lows that we saw a pullback, which obviously telling you that AI trade is still very much intact at the moment. But we saw such as like Apple and Amazon shown a bit of a weakness in the overnight session. So, I think the market's becoming a lot more selective within the tech sector. So not just a blanket rally. So it'll be a very volatile market for the US, and it will be interesting to see how that all flows out in the ASX this week.
So, Jimmy, obviously we're seeing such a bullish market on Wall Street at the moment, but not so here locally. How do you account for that disparity?
This is a conversation that we've been having within our investors quite regularly, so it's not a news for a lot of us. And like you have rightfully kind of pointed out, Andrew, the ASX is having a bit of a tough time in overcoming the geopolitical concerns that we're continuously seeing at the moment. So Strait of Hormuz is opening and closing more than pretty much the market opening, to be honest, at the moment. So I think the main thing is the oil price. So obviously we're seeing the oil price pushing above $108 again overnight, obviously around that disruption with the Strait of Hormuz. And because a lot of our key focus in Australian market is in minerals. So, a lot of these producers, there's market concern or bigger concern, I should say, around the high energy costs and how the price of diesels and energy costs is going to impact the producers. And because we've seen such a huge rally in the gold price and the silver prices, and pretty much along with other commodity prices last year, a lot of these companies raise, a big amount of capital with a big forecast, promised to the investors. And what the market's doing now is really kind of putting them on the test and see, look, with these high energy crises and potential diesel shortages, can you guys actually keep up with the forecast that you have, promised the investors last year? And that's what we're seeing at the moment. So we saw a bit of a recovery in a lot of the producers. Like if you look at the Northern stuff, for example, we recovered pretty big time from that dip. But there's probably going to be a lot of investors putting them on the test. So that's probably why we're seeing a bit of a pullback within the ASX. But we still believe that critical minerals is going to be the key focus for the rest of this year. So I think this, for me, is actually a buying opportunity for me in some of these good producers at the moment.
I see you're also looking at M&A activity, particularly European lithium. What's going on there?
So within the lithium space, European lithium was obviously the topic of the day since last week Friday. So went on a halt, and there's a strong M&A story currently developing at the moment. So there's a Nasdaq listed company called Critical Metals Corp, which used to be the spin-off with one of their flagship asset, Wolfsburg, in European lithium, and got listed there. But Critical Metals Corp is potentially reporting a $1.2 billion takeover. And what was really outstanding to the market was the indicative offer was it's sitting on roughly around 58 cents per share, and this European lithium closed 28.5 cents last week before the halt on Friday. So it's close to about 100% premium to their last traded price. So obviously strategically, it's all about consolidating the key assets like their flagship asset like Wolfsburg and Tambris, which is obviously giving critical metals a scale and funding capacity. But more broadly, it's kind of reinforcing that strategic buyers guys are still very active in the critical minerals, particularly in lithium. And due to the high, energy costs that we're forecasting in the general global market, lithium is one of the outstanding commodities that the market has been, focusing on. So due to that reason, we saw a lot of the other lithium names obviously having a strong run since Friday. So Gallon Lithium is something that we've been in-house, quite heavily invested since the placement of 41 cents. And currently this morning it's matching about 53.5 cents, but closed 52 cents yesterday. So, a lot of these, good lithium names is something we'll see a very positive movement, obviously on top of this kind of great M&A activities we're seeing at the moment.
Yeah, so when you look at that sector, I mean, how do you look at the more established players such as PLS and Liontown?
I think the more up-and-coming developers like Gallon Lithium is probably my main pick at the moment. Obviously PLS and Liontown, these type of guys, it's good to kind of get an exposure, but we probably won't see a heavy run because what the market really wants at the moment is a bit more aggressive return. Due to the fact that lithium being the heart of the commodities for the rest of this year. So it's just like what happened last year when the gold was running and when the market has a huge confidence that gold prices will continuously run. The developers are actually the one that had the biggest return. So I think that's what we might see in the lithium sector. We probably it's no news for a lot of the investors out there that due to these high energy costs and then the oil costs, the lithium and renewable energy will be the key focus for the rest of this year, and also the critical minerals. So when the market see this kind of confidence, the developers is what we're actually seeing having a stronger return, and that's likely my recommendation as well. So Gallon Lithium GLN is something that I'll probably be a lot more comfortable with because they just completed a lot of construction for the facilities as well.